different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward. And I talked a little bit about retail.
Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe. If you do like what you're listening to, please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand everything is planned out. Now, of course, guys, we go over the funny article first. Would you take the shot for 1,500 stimulus check? So, guys, they are pulling at all angles, guys. They're trying to sell you on everything. Every time I turn around, they're trying to sell you on something. Now, we have Biden stating that the $1,500 checks may be included. How does he know? I have no idea, because he's not even in office yet. They make it look like he's making decisions. So I'm very confused when it comes to stuff like that. But let's get into the actual news and the actual stocks. Now, we know there's been talk of banning China's stock, but even if they were to ban them, they still have 3 years before the ban even happens. And they just have to comply with an audit anyway. So I don't see what the point of banning them anyway, but we know how that goes. Nothing but the Hegelian dialectic. We know that all of our banks are invested in China. American Express, JP Morgan, Goldman Sachs. We have ExxonMobil building a $10 billion facility for renewable energy in China. So, guys, we know it's billions of people over there. Once they're poor, come into the middle class, it's going to be so much money, it's game over. I've been over the Belt and Road. So definitely, guys, it's nothing but the Hegelian dialectic. But we have the Credit Suisse says the Asian stocks will kick off an earnings super cycle in 2021. So, guys, just like I stated, it's called the emerging markets for a reason. So the fact is that you have Africa, India, and China, the biggest markets in the world, pulling their poverty people into the middle class. Is going to change the world forever. And then you add on these digital currencies, where basically your phone is going to be your bank. Now, I did a video earlier today on my Crypto Teacher channel, guys. Don't forget to check it out, on the Volcker rule. And changing the Volcker rule, guys, allowed the stock market to go even higher, allowed Bitcoin to hit its new highs. Because what is all this game about, guys? Liquidity. That's correct. They are freeing up capital and gambling with everybody's money, guys. The casino is definitely open. Now, guys, let's get into the actual stocks for this week. It's very, very important. Guys, we know the IPOs and SPACs have been setting off. Money has been easily being made. Now, basically, we have Airbnb. The actual ticker symbol is going to be ABNB. And that is going to range anywhere between $44 to $50. And now we also have DoorDash, which is going to be the ticker symbol dash DASH. And basically that price is going to be from $75 to $85, which I think is expensive. But guys, we know that when it comes to earnings and profits, it doesn't matter in this market. The Fed has to put the money somewhere. They're printing all this money. They have to put it somewhere. And they're going to put it in these companies because what they're doing is that they're investing for 5 and 10 years from now. So we know DoorDash is going to eventually be a robot delivering your food and driving the car, the self-driving car. Same thing with Airbnb. You may be renting a house with 4 other people. So the game is definitely about to change. As we can see Hotels are being crushed right now, but Airbnb is definitely going to come in with that solution. Now, same thing with SPACs, guys. SPACs have been taken off. Every single SPAC I think I went over has went up, 10 to 20% after I went over in the video. So definitely, guys, please make sure you do your own research. I am not your financial advisor. This is not financial advice. Please take the time out to do your own research. Now, guys, we have metal prices soaring, and it's the metals that we don't look at, and that is copper and steel. But who uses copper and steel? That's right, guys, China. Now, lastly, guys, we have pensions. Pensions are switching up their investments. So now they're going into more utilities, e-commerce, your fintech, and then also energy. And we know when pensions invest, they invest 5, 10, 15, 20 years looking ahead. They're always looking for the long term. But we also know our pensions are bankrupt. We know that too. But guys, that's all I have for you. Don't forget to go to my main channel, the Crypto Teacher channel. Please check it out, like and subscribe. Learn the new crypto economy. It's so important. Also, with this channel, guys, like and subscribe because stocks are going to be tokenized and put on blockchain. It's very important that you understand that. And y'all have a wonderful day.
We're not going back to the same economy. We're recovering, but to a different economy. And it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward. And I talked a little bit about retail.
The point is, over the past 3 years, banks have been able to pay out more in capital distributions, in dividends and buybacks than they've actually earned. So their capital levels have been going down. The Fed did not invoke something called a countercyclical capital buffer, which is designed to get banks to increase their capital buffers when you get at the end of a cycle. And there are a lot of good reasons to do that. And we're seeing them now because when you get into economic turmoil, whatever the cause, banks need to expand their balance sheets. People put more money in FDIC and insured deposits. Governments the Treasury issues more debt to deal with the economic turmoil. That creates demands for reserve deposits. So you want excess capital in the system towards the end of a cycle as you're approaching potentially troubled economic times. So